All right. Good morning, traders. I hope you're doing great this morning. I just want to check and see if the broadcast is working. I'm trying some new streaming software. So if you can let me know in the chat if you can see me, that would be very, very helpful. Can y'all see me? Can you hear me? Is it working? Hello, hello, maybe. Awesome. Yay, good. Yeah, I'm trying. Yay, I did it. All right. Well, as I said, good morning to all of you. I am excited to get started with this live session where I'm going to share with you some names that I am watching for bullish plays to the upside. But before I get started, do me a favor and please, please, please hit the like button. It takes a total of about 2 seconds to hit that thumbs up. That helps with the YouTube algorithm so that my videos and live sessions get pushed out to traders that can benefit from having a plan before price gets there. So this morning, I am going to start out, and rather than giving you levels on ES futures, since Trendy John does that on Sundays, I decided to focus on SPX levels because honestly, it's my favorite thing to day trade during the day. So I have all these levels on my chart already and figured it would be helpful for those of you who trade SPX with me during the week in the Trendy Room or SPX Room at Simpler Trading. By the way, if you're watching and you're not a part of the Trendy family, I invite you to click the link in the description and learn more about what we do, how we trade. We have an awesome community of traders, very supportive. Trendy John and I teach live every single day for multiple hours a day. And it's more than just about trade alerts, it is a community of education and not just how to trade type education, but also trading mindset education. We've been involved in a 30-day challenge now for about 25 days, and I think it's been very, very beneficial for trading psychology because don't know about the rest of you, but this last few weeks have not been the easiest to trade for sure. Good morning, Barefoot. All right, so looking at the SPX chart, we have an all-time high of 69.2034. Of course, that would be the ultimate target throughout the rest of this year to get back up to the all-time highs and make new all-time highs. I have no clue if that's going to happen. All I can do is trade the price levels on the chart. I know that last week, not the week we just finished, but that prior week was an inside week, and this week we closed down below there. That means we have created the sell zone at 67.13.61 by 69.20.34. If you are bullish at heart like I am, This is a zone that we're going to see selling pressure in throughout, I believe, December. So bulls have a lot of work to do if we have the dream of taking out new all-time highs. Now, as far as the buy zone, there was a weekly buy zone on my chart right here. It was green zone like this one. I went ahead and removed the green. I left the bottom of this zone. What I'm looking for here is for price on this weekly chart next week to close above 65.51.15. If that happens, it means that basically we're just stuck between 65.51 and 69.20. But if next week is bearish and we close below 65.51, guess what? We have some room to fall. Now you do have an inside and up right in here. And if I just put a line at that inside candle there, that level is about 64.60. That is an area I would look for support. The middle EMA here on the weekly chart is also a level that should act as support. That's going to be somewhere around 6,500. So there is quite a bit of support between 51 and all the way back down here to this buy zone. We just need to focus on trading the levels though, not just for next week, but all weeks. For the daily chart, the buy zone is down here at 6503.33. I found that using inside and up candlestick structure, a couple of them down there. I expect this to act as support. If we get bearish price action next week, I would look and be expecting 6503 to 6384 and a half to be the area that price buyers step in this area next week. As far as the sell zone goes, we have this huge imbalance candle. We call it an imbalance candle because of the size of the candle. That body where that candle opened, right, is at 67.37.93. Now, I don't have a line on this chart before right then because I have an upper weekly edge here, so I really don't need that line. My trendy edge is going to tell me that there's selling pressure in this area before the double inside and down candlestick structure that makes up my sell zone here. So on, say, a 4-hour chart, I would really be using this upper weekly edge. Now, I noted in the newsletter for Simpler on Friday, I wrote a little piece there for that. I noted that yesterday's rally, it rallied very nicely. I might add. It was up about 130 points at one point, but if I just measure the Fibonacci of the Thursday candle, right? This entire candle from wick to wick. Notice that yesterday's candle, when it pushed at that 50 retrace, it met a lot of selling pressure and it just could not get above the golden Fibonacci level of the Thursday price action. That means that bears are still in control in this area. Okay, so while my overall longer term uh, bias is to the upside, and I am still on my swing trade watch list looking to buy dips, I know that in the shorter term time frame look, this price action is bearish. And until the bulls can actually get back above those key golden Fibonacci levels, first, this one from the all-time high to the current low, that's going to be right here at 67, 68.14. then the next one that I'm measuring is just last Thursday's candle. Bulls got to get back above 66.80 to even contemplate getting to the next golden Fibonacci area. So bulls have a lot of work to do over the next few weeks through the end of the year to really solidify that they are back in control. On the 4-hour chart, here's the main Fibonacci that I'm measuring for the downside. There's your golden ratio right there, the 618. Up in this area, you have inside and down candlestick structure. This is the major sell zone. And remember, I told you that my trendy edge is going to be a level that I would use on the 4-hour. Well, look, there it is right there. So next week, our range that we're expecting on SPX is from this lower weekly edge to this upper weekly edge, and everything in between here is a tug of war between bulls and bears. All right, once we get up into this sell zone, though, that is where the bulls have the advantage. When we get to this buy zone, that is where, did I say bulls have the advantage? I meant bears if I did. And down here at this lower line, the weekly edge, this is where bulls have the advantage. So, moral of the story is in swing trading for SPX, I want to buy on sell. So if I'm bullish and I'm trading off this lower line, I don't want to start a swing trade up in here, because why start it up in here whenever I can get it on sell at 66.50? If I told you, hey, pay me $67 for this dinner, or pay me 65.50, which one do you want to do? Right? What would you rather pay for it? You'd want to pay 65.50. Nobody wants to pay more for something. So my key buy zone for next week type of swing trade, maybe if we get a pullback on a Monday or Tuesday, I can go long from here, targeting next Friday for a move back up into here. It worked. Well, buying the dip in a buy zone last week, and it also worked well buying puts on the rally last week. So plan stays the same for this week regarding SPX. Little bonus here, I can create my blueprint for Monday's day trading session right now. I don't even have to wait until Monday, because with SPX there is no price action pre-market. So the levels are already there. I'm first going to draw that primary Fibonacci from the high to the low. There's a couple of zones that I like to focus on. The first one being the 236 to the 38.2. That is what Trendy Jon coined the bear channel. Why is it the bear channel? Well, because we're measuring a downtrend. And when measuring a downtrend, the 23.6 to the 38.2 is a bear channel. If measuring an uptrend, we call it a bull channel. My main area, though, is this golden Fibonacci. And rather than using exactly the 618, I want to use this swing high, that wick high there. It's very, very close to the 618. And as you know, topping wicks equal selling pressure. And so I'm going to include that in that zone. So those are the two major zones for a day trading zone to potentially go short from next week. Upper weekly edge, right? Important. I'm going to put a line there. Lower weekly edge, important. I'm going to put a line there. All right. And then to find where a buy zone is below here, I have to look down and to the left. And one easy way for me to find a fresh zone if it's been a while since price has been there is to mark the low and then turn on that left extension like that. Shoot it off to the left-hand side, and I'm looking for candlestick structure that is inside and up below this line. All right, so I have this candlestick structure in here. This is an inside candle. It's actually two inside candles and then an up candle. I also have a beautiful rounding bottom right here, right? You see it? And they are inside and up candlestick structure right in there. So that's what I'm going to use, and I like it because it's also a big round number. All right. So that's how I'm going to find my buy zone for Monday's potential buy the dip opportunity. Whoops. There we go. Boom and boom. All right. So looking over here and now, that's going to give me this buy zone, this potential sell zone, this potential sell zone. And then, of course, I want to know what the low was last week, and that's going to be right there at 65.20, let's just say 22. All right, so this is my blueprint for Monday's day trade. Okay. All right, now let's get started with my watch list. I am always looking for if the overall trend on the higher time frames is bullish, which it definitely is. I am looking for buy the dip opportunities, but not just on anything. I'm looking for the areas of the market that are doing better or outperforming the overall market. And whenever I looked at koifin.com and was looking for things that from a weekly perspective, monthly, quarterly, even yearly, your year to date perspective, there wasn't a lot that really was across all those time frames because we are seeing a little bit of rotation from what was very, very hot this year, like semiconductors and the tech. Over the last week or two, we have seen some rotation into the lesser traded areas of the market. So nothing really, really stood out. I will say that healthcare has been very hot over the last month. It is leading the way. It is the top performing sector looking back. The quarter to date, the month to date, the week to date, it is at the top. It is number one. Okay, so that is definitely going to have me put some healthcare related names on my watch list. And then from there, gold is still very strong. It has kind of just been consolidating, so to speak, since it made new all time highs, but it's still at the top of the list. If I look back over a year, over the last 3 months, it's towards like number 5 if I look at the month, this month to date. So it's in there. I have some gold and then some gold miners on my list. But I also have some tech names that are relatively stronger than the rest. And that would be Apple, Cisco, Google. Those names are on my list, but as far as Microsoft and Meta and some of the others that have really dropped, even Nvidia and your semiconductor stocks, those aren't on my list because this is a list for potential swing trades out to December the 19th, and they just aren't making the relative outperforming areas of the market. All right. What else is on my list? I have some utilities on here. I have, like I mentioned, some gold miners on here. I also have some consumer staple names on here, and not just any of them, but ones that are outperforming their peers. All right. Oh, Warner Brothers. I need to mention this one. Google is leading the way in communications, but Warner Brothers is holding its own as well. With the overall market looking like dookie on the daily chart, look at Warner Brothers. This is its weekly chart. And if you recall, the weekly chart of the SPX is to the downside. But Warner Brothers, it's making higher highs and higher lows. It is a relative outperformer, so it's definitely on my list here for a potential swing trade to the upside. All right. So I'm going to start at the top here and I'm just going to give you my buy and sell levels. I won't be trading every one of these names. Good morning, Drew. I definitely wait for my triggers, and my triggers I know that price has hit a buy zone or where I'm looking to go long from if an alert goes off. Then I wait for confirmation. Sorry, I wait for confirmation of higher lows in that zone and then I take the trade. I will be patient. I am not a trader that thinks I have to have my hand in every honeypot or anything like that. I know where I want to go long and I wait for price to get there. Now, I got to be honest, I had a trade in Amazon last week that I didn't wait and it cost me. So, that being said, I've learned my lesson. All right. All right. My buy zone on Apple is down here at 266.44 by 264.65. I have a line down here, 264.10. That's a key Fibonacci level and a level that I would look for to place a stop. Targets are these lines above where I would be entering. So 271, 273, 75, and 77. Basically, every odd number above 270, right? That's what I would be looking for Apple, but I do need to see that pullback. Next up is AEP. AEP is resting right here, basically at next week's lower weekly edge. I do have my alert still set for 119.84, but I need to keep an eye on this one because this lower weekly edge could provide the support on this pullback. It is down 1, 2, 3, 4 days in a row, and typical cycles are 2 to 3 days. So it's kind of getting to the point where, hey, it might be where buyers are stepping in. And so I will watch AEP at the lower weekly edge for next week as well. But my real buy zone is down here. All right. And then, of course, target, you can see it, the red zone there. AU, this is a gold miners play there. You can see the weekly uh, range that we are expecting next week. Here is the high up here at 85.85. That gives me a target to the upside. And then as far as the downside goes, the bottom of this chop, so the lower weekly edge to the upper weekly edge would be the play and my first target there. So I'm going to set an alert, and that way, if AU pulls back to the lower weekly edge, I am ready to initiate a trade and targeting 83.36 to 85.85. Then Barrick Gold, I'm not going to over leverage myself in gold or gold miners, but I have a couple of names on here, and these are the zones that I would be looking to play here on Barrick. First off, the upper weekly edge by this high is the target, but you have an strong down candle here where yesterday we wicked up into and price definitely sold off from. So 37.73 would need to be my first target, and then 38.29 to 38.78. If I use the weekly edge to the weekly edge, that would be a buy at 36.05. If I want to get an idea of where that is setting up according to this rally right here, notice the golden pocket, what we call the golden pocket. And I'm going to use last week's lower weekly edge. This is really where I'm more interested in buying the dip, but I could do a starter position at the lower weekly edge for this week and then save half of my total allocation to add to it in this zone if I feel like that lower weekly edge buyers are stepping in there. So for now, I'm setting the alert at this zone, and then I will look at it early in the week to see if that pullback to the lower weekly edge 36.05 is the place to at least start the position. All right. Up next is Cisco. Cisco, I had a bid in to go ahead and start this position at the lower weekly edge. I didn't get my bid in until the afternoon yesterday, and it did not fill. So I will definitely be watching this zone to buy the dip in next week. And I like the risk to reward. I like my target up here of the upper weekly edge by this swing high of 82. So, looking to buy the dip here. I will start the position because of the weakness, recent weakness in the NASDAQ. I will do a starter position here with plans to add at the golden Fibonacci level. And then my stop is a candle close below this daily 21 right here at 73.88. All right. Let's look at Dominion. This is a utility type play. I like the fact that we keep making higher lows on Dominion. I have a clear defined zone to trade off of based on Fibonacci and inside and up candlestick structure and trendy edges. All right. Dominion is in a very defined squeeze. It has been chopping in this area for quite some time. And if utilities want to break out, I want to be a part of this because Dominion is relative strong to its peers. So here would be my buy zone. This is first target. Yeah, for sure, JR. This is first target, and the red zone up here would be my second target. So that's Dominion. Here's one that we don't talk about a lot, Gap, right? There's a lot to like about this. First off, look at the gap. Look at the gap, and there is no candlestick structure in between 27.95 and where price is currently at. So I used Fibonacci to find targets to the upside, the first one being 25.06, and I believe I have a weekly edge right there as well. Then 26.78, and target would be 27.95 to 29.39. This is my buy zone for Gap. And if I get an alert that Gap is in that buy zone, then I'm looking to go long from there. All of these pretty much would be December or January expirations, guys. That's my plan. All right, let's look at Guild. This is a healthcare play, relatively strong for sure, making new all-time highs. The levels 130.94, 133.82, and 138.80. Those are Fibonacci extension targets. They are not candlestick structure or edges or anything like that. This is extension targets because of price being at all-time highs. This is my buy zone here. It's about $2.25 of risk. The first target up here is approximately $3.50, and then obviously it goes up as price hits these extension targets. I like this name to the upside, and it is strong. It's also affordable for my account. So I can buy multiple contracts to play the upside move on Guild. Let's look at GLD. I said, look, it's basically consolidating here. So it made a high back the 20th of October, and then it sold off from there. Buyers started stepping in here, and it rallied back up to this sell zone, and then it dropped. And now we've just been consolidating here. So my first entry would be the lower weekly edge here for next week. I'm going to go ahead and put an alert there. But also the bottom where price uh, gapped up from is right at that lower weekly edge. But down in here, we have an inside and up that has been where buyers are stepping up. It's also in line with the daily 50. This is the real zone that I am most interested in for GLD, but I do want to have an alert at that lower weekly edge. As far as targets go to the upside, the upper weekly edge, and then this sell zone. All right, let's look at Google. Absolutely on fire. We in the trendy room for long-term type equity trade for this year have been long Google since, let's see, 139, 139. It's been an awesome trade. All right. Last trim was at 299. Next trim's all the way up here at 350. I'm down to not a lot of equity left because I was trimming it on its way back up. But for a shorter term trade, if Google were to pull back to this lower weekly edge that's lining up with the daily 21, this would be a dip buy for me. And as far as a stop, I would use this gap fill of this candle right here. So it would make my risk about $5, but my reward is much better than that. Now, I could get a conservative trim here by anticipating a pullback to this gap fill here, right? And use the 50 retrace of that or the 618, either one. But nonetheless, a $5 risk right here, and the reward is still $10 to a 50 retrace right there. So I like the risk to reward, but I am not a buyer. I'm not buying it here because it's not on sale. I want to wait for the sell. And for me, this confluence right here is that sell that I would be looking to buy the dip on Google. Now let's look at HCC. This is another metals, mining, gold, GDX type of play. Relative strength here, if I measure from this big old gap that it had up to the high, you can see it's at a very, very important level, this 618 of that move. Actually, let me start it from that wick. There you go. It's at this 618. I, as a buyer to the upside on this name, would want to see 72.76 hold as support. If it doesn't, that's not a good sign for immediate buy because I would be looking for it to come down and potentially fill that gap. But I have an idea that if it can hold this upper yearly edge that's in line with that 618 right there, that it could be a good play. So my zone for this trade would be here, just given it about $1.50 of movement right here. Okay. So buying here, and then of course the upper weekly edge is here, but I have an inside and down slightly before that. So I need to mark that as my trim. And then if I take my fibs and I run them in the opposite direction, I want to see, okay, that looks good because that lines up with where I would want to trim it on the way back up. I can also mark this down candle that the move down began, and that'll give me some more targets there. So I got about $1.50 of risk here, but the reward is much better than that. So I like this play on HCC back to the upside. Now, again, guys, I won't be taking every one of these trades. I don't ever have more than 50% of my account at risk, ever, total account balance. And really, it's usually way less than that. So I take them as they set up. But once I have gotten to the threshold that I want at risk in the market, I'm going to back down. All right, let's talk about Hershey because this thing has been great as far as relative strength. The lower weekly edge is all the way down here. And if I treat this trade as a ACDC trade, which is a very popular strategy in the trendy room, that tells me this is my target. Of course, this upper weekly edge where price is at right now would be a target, but this is a zone that I would be looking to buy on Hershey, and that's using the lower weekly edge and then this candlestick structure right here. So my buy zone is going to be about $4 wide, and my first reward is going to be, what is that, to $6 above. So the risk to reward is there. Dave, yeah, at any given time, yes, to answer your question. All right, so this would be my buy zone, and there's my targets above for Hershey. And let me move my alert up right here so that I'll know when Hershey is close to my buy zone. J&J, wow. I also have equity in this name, FYI. Oh, Lord, from way below. Let's see. So I I'd have to pull up my equity account, but it's somewhere down here near 150. All right. So obviously that equity position is doing very well as J&J makes new all-time highs. From a swing trade perspective, though, J&J, if I get a pullback on J&J to this buy zone right here with the lower weekly edge inside of it, this is where I'd be interested in taking a trade on J&J. Now you do have a buy zone all the way up here at 201.74, but just given the fact that we're getting trendy turn signals here, and that it probably needs a little bit of rest, because notice where your daily 9 EMA is at. It is pretty extended from that. And the zone that I would be looking to buy is lining up with that daily edge. So that's why I am more interested in trading this zone. That's going to have a risk of just short of $4, and the reward is obviously much better. But on this 4-hour chart, if J&J creates an inside and down right here, I would want to have a target at that inside and down to at least move my stop to break even, or collect some profits and move my stop to break even. All right, now to J&J, KDP, Keurig, Dr. Pepper. This is an AC/DC play. AC/DC equals ME. That's right up here. And these accelerator arrows would be a target, but I would also use this upper weekly edge. So the play for me is down here towards the decelerator arrows that encompasses the lower weekly edge. The risk is about 40 cents. The initial reward is about 75 cents, but ultimately it's all the way up here. But I cannot ignore this big imbalance candle. That would be another trim for me. So considering that KDP has a weekly or a monthly ATR of $3, right? And I would be buying here. I need at least a month on this trade. So that would mean buying at the earliest the December expirations, or to give myself more time, the January expirations on KDP. All right. Coke is another uh, more defensive area of the market, right? Consumer staples. It has been outperforming, but it's right at resistance. Coke's buy zone is right in here. You got key moving averages in here. You got trendy edges in here. You have inside and up candlestick structure in here. You got all the things. This is about $1.80 of risk, and reward is to the upper weekly edge would be approximately $2, but to this sell zone, you have a reward of about 2 to $3.50. So there's not a lot of risk to reward benefit on KO. Sorry, guys. But I wanted it on my watch list here because it is from a relative strength inside of its sector. It's just way outperforming KO and Colgate and Walmart. Those are the key, and KDP, sorry. Those are the areas as far as discretion, consumer staples goes that's outperforming. I have PG on my chart because this is setting up for an AC/DC play, but it doesn't have the green candles. It's more neutral. All right, so that's why I'm going to go ahead and leave KO. It's not my favorite setup here because of the risk to reward, but I'm leaving it on my chart just to get an idea. Here's one that is interesting because it is way love that Southwest airline. It is way outperforming its peers. And I'm more interested in this consolidation that has been happening on the weekly chart. Measuring this uptrend here from April to the high, um, price is kind of just hanging out. Sorry, I need to move this. Sorry. It's hanging out at the golden pocket, okay? If I can ever get the thing to work. There you go. There it is. It's hanging out at the golden pocket area right here, and it's building up momentum. So the trade is more of, again, going out maybe J- January, February, March. Oh, believe me, Dave, I know we are frequent flyers of Southwest. So, yeah, and as much as my husband travels, you can imagine the amount of miles he puts on. He travels from Florida to New Hampshire and back every single week of the year. So a lot of Southwest miles put in. So we really won't be affected because obviously we're top uh, priority boarding. But yep. Okay. So anyway, this is what I'm really interested in is this area in here, and this would be a longer term trade. As far as targets to the upside, this yearly edge would be that first target, and then this zone would be the next target. So I'd want to buy here, and I would want to target here and here. And again, this would be a longer term type trade for me. Merck, another healthcare name that is outperforming its peers. It's got a buy zone here that is lining up nicely with the lower weekly edge. It has a risk of about $2.33, and it has a reward much more than that. I like this name. Like this name. All right. Hey, Dave, if it affects it, I just hope that whatever the noise is drives it into a buy zone. All right, NEE. This is one of my favorite utility stocks to trade. We got a nice weekly range. It's been falling here. I like the buy zone into here. Really, I would need to use the upper yearly edge here, but 82.48 to 80.60, that's little less than a $2 risk. And then the reward's going to be that inside and down, that first reward. And then the target is going to be 86.14 by 87.53 right here. All right, that's what the play on NEE would look like. You can see I got quite the variety on the list, and it's just I'm basing it off of what is outperforming their peers or what is outperforming the market. And I want some names that if the market continues risk off, I have some plays. And if the market swaps to more risk on, then I also have some plays, but it is with names that are relatively strong. All right, so that's what NEE looks like. Let me get an alert here. Great question, Claudia. Claudia asked, hi, Melissa. Once you get in your buying zone, do you look in the smaller time frame, the same inside and up to take the trade? What I look for in a buy zone, I do go to a smaller time frame, and typically like an hourly chart, maybe down to a 30-minute chart, really an hourly chart. And I'm looking for higher lows and then a break above the body of that higher low candle would be my trigger if price is it's still inside my buy zone or relatively close to my buy zone, Claudia. All right, let's look at O'Reilly. O'Reilly, I had on the list for last week, and it didn't pull back for me to get the trade. But this is another AC/DC setup on O'Reilly, so I'd be playing it off of this 4-hour chart. You can see where the lower weekly edge is right here, right? And as long as price holds 99.60 to 97.55. We're looking for a play back up. Obviously, this 618 of the down move is going to be important. So the first trim would be 101.63 to 102.34. And then the target is going to be 104.91, 106.62, and 108.72. So as far from a risk to reward perspective, I'm looking at about $2 of risk. That initial target is going to be basically a 1-for-1. But if price can finally get and hold up above this 618, that puts this 887 right in my sights. So I have O'Reilly still on my, wow, I have no idea what it just did. I have O'Reilly still on in my sights here for a potential trade. So I'm going to go ahead and create an alert below this level right there. But because I have a lower weekly edge here, I need to remember this, that price could be coming back too. If it gets to these decel arrows, it could be coming back to find buyers at 98.26. For that reason, I would scale into that trade. All right. Let's look at Procter and Gamble. It is an ACDC setup potentially. As price pushes above here, that's the trigger for an AC/DC setup. Notice this inside and down candlestick structure lining up basically with this monthly edge mid or these accelerator arrows. That means in this area here would be a trim. All right. And then the target is right here. So, what would this look like? You can look at this two different ways. A momentum play means that you're wanting to go long as price pushes through here. And then you would set your stop. You could use like this wick here. So you'd want to be going long above these decelerator arrows, and you'd have a tight stop here, right? And then your targets are here. Or you wait for a pullback buy to this imbalance candle here on Procter and Gamble, and you play it off of this monthly edge by this imbalance candle, and then this becomes a resistance, right? So that would be a trim, trim, trim. All right, couple of different ways to play Procter and Gamble here, and depending on price action on Monday, you're going to have a pretty good idea of which way I'll be looking to play this, but I don't know right now. So for now, above the decel, I would get an alert, or a pullback to this imbalance candle, I would get an alert. All right. All right. Steel dynamics here. It is very tight, but if this squeeze wants to fire to the upside, it's a great play potentially to these all-time highs. Notice that the lower weekly edge sets up nicely at where this consolidation has been creating a base in here. So for that reason, I'm liking this area on Steel Dynamics, and I would use this yearly edge for a stop. So basically, that would be about $3.50 of risk here, and the target would be about 5, and then obviously the next targets, your reward goes up. So I already have the alert there. I would use the yearly edge as the stop, and that would be daily candle closes below. TJX, this is another outperformer here. They had earnings recently. It is still in a very long, from September, daily squeeze. It has room to run. It's because all-time highs, right? See, all-time highs. So you don't have the candlestick structure in the way. You got a nice inside and up here from, uh, was that Thursday to Friday? You created an inside and up. You also have inside right in here that's going to line up with this monthly edge, right? And the lower weekly. This is the zone on TJX that I would be willing to play a pullback by. Now, this pullback might be just a wick for price to come back down into this rounding bottom. I don't know. It might only pull back to the daily 9 EMA. But either way, my target is going to be the upper weekly edge, this all-time high, and then if we take out the all-time high, I would run Fibonacci extensions for the targets. So this zone gives me a risk of approximately $1.60 or so. And the reward would be about $5. If I take it early at the 9 EMA at this inside and up candlestick structure right here, then I've got a risk of about $5.50, and the reward is about 4.5. So I don't really like this entry as much as I do this entry. So that's where my alert is going to go for me on TJX. All right. All right. TVTX, this is one that I found just because it's an outperformer of its peers and it was right at the lower weekly edge. I can use this inside and up candlestick structure here. Yes, exactly, Claudia. I can use that inside and up candlestick structure there to give me a buy zone, and that lines up not just with our trendy edges, but it also lines up with the daily 21 there. All right, and the target would be upper weekly edge right here. Let me just see on this name. Yep, it is all-time highs. So this is a risk of about $1.50, a little less than that, and it's got a reward of a little over $2, but the potential reward is based on a monthly ATR of about $5. So if I'm buying here, that $5 ATR would be about 39. So you can see it could be a very good risk to reward type trade. I would be buying at the lower end of what has been chop, but we are making higher lows and higher highs in these pivots. So I like this for a potential play. And obviously, I need to buy myself enough time for the play to work out. All right. But that's one that could be a play come Monday because price is setting right at that lower weekly edge. All right. Warner Brothers, I think I went over this potentially. I went over this earlier. This name is the only other name besides Google that is really outperforming in the communication sector. Verizon looks pretty good, but oh, Verizon is painful to trade if you've never traded it. But this would be my buy zone for this week. That is the lower weekly edge there. Buy that bottoming wick right here. That would be my buy zone for this week. And then as far as targets go, the upper weekly edge is going to be a target and then that big red zone. So I have a relatively small risk of about 75 cents of risk. And the first reward is about $1.40. So it has a good risk to reward. And my target zone is up in here all the way potentially up to 27 and a half. All right. And then last but not least is Walmart. Walmart had good earnings, FYI, and we do have Walmart equity in that from a chart that I've been sharing for this year. Let me see. All right, here's where we got in. All right. So Walmart was last trimmed at 105, next trim's 113. But from a smaller time frame perspective, and if the market remains more risk off than risk on, Walmart's an outperformer and it could benefit. And I like the golden pocket pullback here from where it closed before it gapped up. This is the GP right here. Right? But notice the daily 50 and the daily 21 is slightly below there. So I would use those in my zone, buy zone. All right. and that would give me a risk of about $1.60 and a reward of about $2 and $3. All right. So I like the risk to reward there, and it is a more defensive type of play. You got an upper monthly edge here at 108.46, and then, of course, the high 109.58. So this would be the buy zone. This would be the target to the upside. All right, so I went through a ton of charts, and I have alerts set on these. Once my alerts go off, I wait for confirmation, and then I take the trade, right? As long as I'm not in too many trades that puts too much of my capital at risk. And also, I don't want to load up all tech or all defensive or all healthcare. I am very cognizant as I'm putting on trades what is already on my books, because I have been over leveraged in one area of the market before in a December that cost me about 40% of my account. And that was not a fun experience. So I don't want to do that again. So I do stay mindful of what is in my account, and a sudden pullback in one area of the market, I don't want it to wreck my account. All right. All right, that is my time for today. I got this in 1 hour and 5 minutes. I did good to get it back into the um, 1 hour-ish time frame. If you haven't already, please hit the like button. Make sure you're subscribed to the channel, and make sure, if you're not a part of the trendy trading room at Simpler Trading, that you click the link in the description. Come and join Trendy John and I in the room, hang out with our traders, and become a part of what I believe is the best trading community out there. Okay? Y'all have a wonderful weekend. And if you're in the rooms, I'll see you in the rooms on Monday.